I was hoping you might be willing to give your thoughts on the economy and the stock market. Yeah, absolutely. Let's kick it off with the economy. So the way it works is governments try to improve the economy using two different sets of medicine. Okay, they've got one medicine called fiscal policy and another one called monetary policy. Now, fiscal policy is basically stimulus programs. So they spend a lot of money to build bridges, walls, defend the country, etc. Okay, and when they do that, that creates more jobs. And they also have tax incentives as well, and many other incentives. You get tax breaks, etc., especially COVID relief tax breaks. Next up, we have monetary policy on the economic side. And so monetary policy is the policy of money, meaning interest rates. And so the government can cut interest rates in order to stimulate the economy. And so when times are great, governments really should be fiscally responsible and raise interest rates a bit, not too much, so that when times are bad or more challenging like now, they can jumpstart the economy by actually cutting rates. And once they cut rates to zero, which is basically where they are right now, then they can't really do much more from a monetary policy perspective. And so from a monetary policy perspective, globally, rates are close to zero. There's not much you can do. I know that China cut their interest rates for the second time recently because although last year they had robust growth of 8%, they saw a massive slowdown in their economy in the month of December, partially given the real estate crisis. So once interest rates are basically zero, which they are basically in America, and once we're done with all fiscal policy stimulus, then there's nothing you can do. Now, the reason that the government around the world and the United States have left interest rates at close to zero is because they can't jumpstart the economy anymore. And so what's happening is this. Over the past 2 years or year and a half or so, the market has done extraordinarily well. I know that the NASDAQ just entered correction territory, meaning that the index is down 10% from the peak. But since the markets have done extraordinarily well, there's this invisible wealth effect. And what that means is everybody feels a little bit richer because everybody's portfolios are going up in value or have been until recently. And as a result, people spend more money, which helps the economy. It's self-fulfilling. And the reason why inflation is quite high lately is because governments are worried about the next edition, or I should say mutation of COVID. If they were comfortable with the outlook from a COVID data analysis perspective, they would have raised rates quite a bit already. And so if they raise rates too early and we get another COVID scare, then what happens is you can't do anything to stimulate the economy, right? Because a little rate increase can destroy the economy. It's frightening, actually. So from a market perspective, people watch interest rates closely. And when rates spike, then all speculative asset classes like NFTs, some real estate markets, and stocks and cryptocurrencies will get hit, maybe with the exception of Bitcoin, which could be seen as digital gold. So you always have to look at interest rates closely when you invest in the markets. And there's a reason why in the early 1980s, when rates were close to 20%, that the markets did poorly, and the real estate market did poorly as well, and all markets in general.